Hey, good morning. Good morning, good afternoon. Morning, Sam. Hello, hello, Jose. How are you? Okay, let's get ready. Uh, oh, from Michigan. Oh, I didn't realize you're joining from Michigan. I know there are a few folks who joined from Michigan, but I did not know that Ram, you're also from Michigan. Sam is asking, do I own BYD? I have a sad story on BYD. You want to hear that? So yeah, let's while we wait for others to join in, why not talk about BYD? I was not that educated as an investor. It's a lifelong pursuit. So I just started my investing, not just started, but I was like just started dabbling into individual companies, and I came across BYD. I did not know anything about BYD except the fact that Warren Buffett had a stake in it. Um and then I bought the stock shares at $6. I bought BYD at $6. And then, of course, I did not know about the company. I did not build my own conviction. And then when it became $9, I'm like, wow, 50% higher, right? I sold it. So, and after that, I never got back into BYD. And this is, I'm talking about 2017 or something. See, I sold some of the winners, too soon. The biggest regrets, someone asked me, why do I own some of the stocks that are like fallen down 60%, 70%? So I told that the biggest regrets that I have in investing life is selling some of the companies that became multi-bagger after I sold them, right? BYD is one of them. So some of the companies that have down 80, 90% or even could go down to zero, that's okay because a lot of other winners have covered up for those losses. So, and I mean, I'm talking about like 8, 9 years ago. So that's my story on BYD. I do not own BYD, but I think if it falls down to 80, $90, yes, I will probably get back into BYD. It's a good company. And I know recently they cut down all the prices of the cars, and which caused a lot of issues around other companies. But it is the biggest, I would say, EV maker, or BEV vehicles or NEV vehicles, as Chinese companies call themselves, right? It's the biggest NEV manufacturer in the world, and recently it surpassed Tesla as the biggest EV producer, or I think EV seller in Europe. So it's a good company. Yeah, BYD is at 99. I didn't check recently, but I think I have some buy order sitting at uh, BYDDF. There are, I think, two of them, BYDDF and BYDDY. Again, these are the ADRs. 120.99 looks interesting. My only concern around, let's say, BYD is because there are no options on this one. There is nothing much you can do if the stock doesn't go in your favor. You just buy a whole and pray that it works fine, which could be okay, but I do want to get some control on reducing my cost basis and do not want to just depend on market generosity to make money, right? So that's another reason why I've not owned BYD just yet. Jose, would love to discuss Xpeng. You know my requirements. If you want to discuss a company, you need to give me three things. Of course, the name of the company, or better, the ticker, the market cap, and who the CEO is. And I'll bring up next week for discussion. Okay, all right. Now I understand the secret behind Ramk. Okay. BYDDY is a 99. That is good. Good time to buy. I don't know. It depends on what's your story behind BYD. I've not looked into BYD as like from on detailed perspective, but yeah, we can bring up. Give me three things. CEO, ticker you already gave me, Pankaj, and market cap. Is this pink sheets? Yes, this is it's traded OTC. That is why you don't have options against it. If there were options against it, probably I would have been in BYD already. Right. Look at what happened to Neo. All these, I mean, up EV companies, especially in China, it's such a competitive field. You don't know which companies will survive or which will not. And if you don't have any way to reduce your cost basis, then you know you're just dependent on the management or what the stock market does to your stock. Like after experiencing with Neo, wherein I've owned Neo at all places at like $2 all the way to where it was $50 and now back at 3 or 4. If it was not for options, my position would have been underwater. But now my cost basis is I think less than 50 cents. So it has helped me. If BYD was trading on exchange, I would have been in BYD. Pankaj says, I wanted to core weave drop 6%. I think we have talked about core weave multiple times. I did a review of core weave. For me, core weave is not a, I don't want to bring a long-term position on it, but yeah, it's a very active, when I say active means from an options perspective also, and there's a lot of volume on core weave. So it could be a good trading vehicle. I just don't like its business model. It's dependent on one or maybe couple of big suppliers and a few big customers run by ex energy traders. Yeah, it is currently on the train of AI, and hence the market is rewarding it. But I don't think I want to build a long-term position on CoreWeave. But it could be a good trading vehicle. So because it gives it basically has bought a lot of rare commodity, which is Nvidia's most powerful chips, and now it is renting out those chips. So limited number of supplier, limited number of big customers. Not a great business model to be in. But when you talk about AI, who cares about the business model? And the market is just rewarding it. So I would trade it. I don't want to build a position or as a long-term hold on CoreView just yet. And of course, I had my own concerns on how the debt that they have raised from another hedge fund in which founders had a stake. It's all whole spaghetti of a corporate misgovernance, right? So I don't want to be giving my money to the CEO or the company management where there are so many doubts that I have. If you want to get deeper into CoreWeave, we have covered it during one of our previous sessions where I did a whole review of CoreWeave IPO. So yeah, Pankaj, maybe look into that one, that recording of that session. Can you explain more about what you're reducing cost basis? Okay, so Jose is already. Thank you, Jose, for helping Nick on that one. And why an ADV? Doesn't that mean you limit your upside? Yeah, there are ways to play it. There is no free lunch. If you sell covered call, you limit your upside, but then you have to decide you want to sell maybe call spread instead of a covered call. Maybe you want to sell covered call only in one of your portion. So there are ways to do it, and it's not just covered call. I mean, you can sell options on the put side also. And I've been doing it for almost 9 years, playing both sides. So has worked out for me. Of course, there are some shares in which selling options is not that great because you don't have a good option market. Um, but there are overall, I think I have benefited. So I will continue to do it. And yeah, if it doesn't work for you, that's fine. There are many ways to make money in the market. There is no one right way, right? I have figured out after years of experimentation what works for me based on my personality. And I would like to sleep well in the night. I don't want to put myself in a position where I'm losing sleep because of the way I'm investing, right? So, Pankaj, my question related to core will mostly to research on understanding why it dropped suddenly. I don't look at or don't worry much about the day-to-day movements. Um, Anything could happen on that day. So, oh, it was a new all-time, maybe profiting. I have no idea. All right, Pankaj, yeah, go ahead. Looks like you have a question.
Sorry, I was just unmuting myself just to explain, and we can discuss after the call or means towards the end. So just question was that it was very puzzling. I have not seen this kind of movement so far with my limited trading history, that it went to all-time high and suddenly dropped like about 10-15%, making it 6 to 7% low on that particular day, and there was no news on why this could go low. So just from your perspective, like if you want to do a research on why this happened, like how would you go about it? But this is not something we can discuss later on. No, no, means it may be a big topic.
Yeah. No, so here's the thing. I have seen it multiple times
Okay,
happening to stocks on why the stock will go down one fine day, right? Could be no reason. There could be profit taking. There could be uh, sometimes you will see triple witching, quarter witching based on options expiry and all that stuff. There could be many things. There could be I don't know. Maybe there are leveraged funds based on core week, right? And I don't really bother about one day movement because there is no way for us to predict. So I generally don't even waste my time on trying to figure this out because there's no consistent way to make money on this one.
got it, cool. Okay, thank you.
Michael, to help boost returns, a typical 70-30 Nasdaq. I'm assuming you're talking about 70% stocks and bonds combination. What do you think of selling covered calls? Is it best risk reward for those who are older and more risk adverse? What's the real downside? The downside on selling covered calls is you are limiting your opportunity beyond your call strike price, and you still have the risk of the downside, right? So let's say if I own a stock at 100 and I sell a covered call at 110, right? So if the stock goes to 120, you make only profit still 110, right? And say you got $1 for selling that, but you let the stock continues to go down, you still own your stock. So you still have a risk, but you got $1, which is like 1%, and you've reduced your cost by 1% for selling that call. You won't see the benefit in doing by doing 1 month or 2 months, but if you do it continuously, now I see almost 80% of the stocks that I own, I've reduced the cost basis by selling not just covered call, but also when trying to acquire a stock, I'll sell a put against it or a put spread, etc. Right. So that's the downside, is that you are limiting it's an opportunity loss, right? And yeah, there's a little bit of a risk reduction, but you hold majority of risk is in your stock portfolio. You still have that risk, right? So that's I would say, call it as a downside, if you will, as a lost opportunity. Uh, Jose, I think Xpeng is a good growth stock because they're strengthening margins, about to turn profitable. Yeah, I mean, Xpeng is in my one of those like moonshot portfolio. And really, because they did in 2023, I saw them doing a demo of the test flight in Dubai. And but that's Xpeng is not the only company. There's another, I think, couple of companies from China who are also in advanced stages of what do you call eVTOL, right? Electric vertical takeoff and landing. So this is a we don't see that in US just yet. I think Joby Aviation is trying to do that, but a lot of Chinese companies are in eVTOL space. Xpeng is one of them, but not the only one. I think there's another one called eHang or something, or eHung. I don't remember the name exactly. But yeah, and it's for me, the reason I still hold is because it's optionable. Even though the stock is below where I bought the stock, my overall I'm still profitable because of reduction of cost basis and all that stuff. Technicals also look like to break out. Maybe, maybe not. I'm not a big fan of technical for the long term. Maybe for short term, these technicals might work out, right? But XPEV. But for a long term, I just want to look at a business. Again, this is all these EV business will still demand a lot of investments, and I'm assuming that other than BYD, all others consider it as your moonshot bets, right? I don't know which one will survive, which one will not. We have seen Neo raising multiple rounds of funding, diluting shareholders by giving stake to provincial governments to raise money. It's a long term play, right? So I have a little bit of a portion in Neo in Xpeng, but I'm not betting farm on any one of these companies. I think one company which probably will still survive a decade later, 2 decades later, maybe BYD, right? But all others are, let's say, your gambling chips. She says Corby has an ATR of 11.25. Is a trading range ATR, Sri? I think I've heard of this term before, but maybe average trading range? But I don't know. I don't use that. So I feel they're copying Elon Tesla playbook how to motivate. How do you think about the big, beautiful bill and debt ceiling could affect stocks? We talked about the big and the beautiful last week. I mean, the reason why we saw, I was it last week, that the bond yields went up was big and beautiful didn't turn out to be that great when the rest of the market thinks about US adding between $3 to $5 trillion of deficit. It's not good. Right? So that was the concern from the big and the beautiful. And we went through the different aspects of I think the major points that have been covered in Big and the Beautiful. So if you go and watch last week's recording, you'll know what we talked about, Jim. Average true range. Okay, it's still more liquidity. Liquidity if Jerome Powell comes and says they're going to cut the interest rate. I know Powell and Trump had a meeting. Uh, but we don't know what happened in the meeting. And of course, Jerome Powell hasn't come and talked anything about cutting the rates. So not sure about the liquidity in the markets. But yeah, government will spend. So that means if you're spending like drunken sailors, then how are you going to fund it? Where is the government spending by funding it? If you're just going to print money, it's going to devalue our own currency, right? And then I would rather be in Bitcoin. Right. That's what we saw. Bitcoin went up to like 112. Right. So the whole Doge $2 trillion not happening. Elon Musk is now back. Is done with his duty as a special envoy to or consultant to the government. And yeah, we'll see. All right. What else before we jump into our regular discussion? So I'll take note of Xpeng. For the next week, anything else? I know UNH is there. Aditya is not in the call today because they're attending Charles Schwab event. Uh, they funded by cutting Medicaid and SNAP. Yeah, they've added more requirements on who will be eligible for SNAP benefits and Medicaid. But yeah, I mean, it's never easy to build your investing thesis based on government. We have seen both for Democrats as well as Republicans. Markets have done well. Eventually, if you invest in a great companies and the good economy, you're just getting lifted. Rising tide lift all the boats, so you will get lifted too. Alrighty. So let's dive into today's session. So welcome everyone to our discussion number 279. And to talk about stocks, maybe a little bit of a macro. I'm not a big macro guy. And see what's happening on the investing side, tech side, some interesting charts, what I found this week, and things like that. So great run for almost 5 years plus, and hope to do this, as long as I can. And thank you for showing up. So today, I still want to continue the ARK Big Ideas. That's a 150-page PDF. So last week we covered, I think, two big topics. Maybe I'll cover two or three more today, and then we'll continue on this the next week. I think it'll take us 3, 4 sessions to go through the report. I'll give you a quick update from a Microsoft Build event. So last week I gave you update on the Google I/O event, and today we'll talk about a Build event. Then some, interesting charts, news, analysis, etc. And of course, you have questions on options, general investing. We'll answer your questions. Right. Before I dive into today's session, anyone joining here for the first time? Any new participants? No? All regular people? Phil says yes. Welcome, Phil. Welcome. Glad to have you here. Hopefully, you will find something which is interesting to you. Might help Michael. Michael is new. Okay, maybe. I mean, I have had another Michael in the call for many weeks. So sorry, maybe this is a new Michael. Phil, you mind introducing yourself? What kind of investor slash trader you are, so that I know where you're coming from.
Yeah, I'm very new to this group. This is my first time to join. In terms of investing, I'm pretty much doing the stocks as well as Bitcoin. Talking the stocks, I think Vivek, you just mentioned about selling the puts and then options, things like that. So I do that as well. But I'm still kind of like learner, so a lot to learn. In terms of the trading the stocks, I am currently try out the algorithmic trading, which
Mm.
is, sort of remove myself from the daily checking on the stocks and things like that, pricing movements, such as like that. But I do believe, technical analysis because I feel like looking at the chart sometimes really can give us, the movement potential ahead of the events.
Yeah.
So that's my impression. In terms of the Bitcoin, so. I think that's kind of like slow mover. When it's moved up, it moves very fast. But if the 4-year cycle still exists, I think there are maybe almost like 3 years. It's kind of like dormant and quiet. So I think they just need a little bit. Number one is the conviction. Number two is the patience. So that's
Yeah.
all by myself. Yeah.
It it tests you in ways that you would have never expected, right?
Yeah.
70-80% drawdowns have been common in Bitcoin space. I don't think we're gonna get 80% drawdown, but I'm ready for 50%. All right, Michael, would love to hear about you.
Hey, Vivek.
Hey.
Yes, this is a new Michael. And so I basically have most of my assets managed at, your typical places like a Charles Schwab and Fidelity.
Hmm.
So I'm paying those guys, a percentage to manage all that money. But I have a pretty good technical background and understand kind of stocks and options and things, but I haven't. I'm realizing that if I manage it myself, obviously I don't have to pay those guys, their 0.8%, which adds up. But I've always been reluctant to manage it myself because I'm, afraid I'm going to make a mistake. Or
Yep.
so that's kind of what I'm hoping to get the confidence to just do it myself and just do a diversified portfolio on my own.
Sure. That's great. First thing, you could start with checking the performance of that fund with, let's say, S&P 500, right? Of and see how well are they, helping you make money, because S&P 500 expense ratio is 0.06%. And if they can't even beat S&P 500, then why would you pay whatever 90 basis points for that you're paying you? But
Well, the whole idea is they're, it's supposed to be a risk
Yeah.
risk related, that's why you don't just put your money in the S&P. They've got, there's maybe like 40 or 50 holdings, but a lot of them are, it's not like they buy me individual stocks. A lot of them are ETFs and mutual funds,
Okay. So then you have a cost of a mutual funds as well. So you have a ETF probably at least better. I mean, you don't have those horrible fees in ETF. Some of them do. Depends on what kind of a ETF you bought in. And then you also have a cost on the mutual fund, and then top of it you have a management cost from shop. It's always and you said it very right that this small percent, 1% fee, 1.5% fee doesn't seem to be too much, but over 10-15 years period, it actually adds up. I think maybe earlier I done a simulation, crude simulation on Google Sheet, just adding a 1% and starting at, let's say, $10,000 over 30 or 40-year period. If you look at, you know, the value of your portfolio is less than the amount of fee that advisor has generated, right? So anyway, there's a lot of again, I'm not against money managers. They do solve a critical need, because not everyone is comfortable in managing their own money, right? Just like not everyone is comfortable in driving. Yeah, find a driver rather than walking. Maybe get into a cab, right? So it's a need that they serve. But if you are, a little bit active and you do want to manage, I think the best thing is to maybe take control of your own money. Ross, the faithful are all here. This is I think someone has said this is our Sunday church, right? Every Saturday morning coming here. Okay, so now I know who is behind Ramka. Okay. They use cookie cutter approach based on account risk tolerance. Yeah, I mean, they'll ask you to, I don't know how the Charles Schwab works, but many robo advisors, or they look at what's your risk profile and then they'll allocate based on that, so much into bonds. And if you want to get international, there are ETFs and all that stuff. You can build on your own, or you can hand over the money to them. Either way. The idea is you should be investing. Don't leave your money in your checking account or in your savings account. Then we will always be falling behind, right? The best is take a baby step. If you don't know how to invest, go to money manager. But fine, if you learn how to invest, that's the best one. All right, so yeah, let's dive into today's session. But before that, I have to say customary stuff, which is anything that we discuss here is not an investment, financial, or tax advice. I spent all my life working in a technology company, and so it will be a sin to take a financial advice from me. But we're here to learn from each other, and that's the whole motive of meeting every Saturday morning. So a couple of things I want to talk about. I think I did mention it in 2 weeks ago. There's an in-person event. So there's an opportunity maybe for us to meet in person. Those who are in Bay Area, I will be attending an event like Santa Clara, a technical analysis and option strategy workshop. It's a 2-day workshop, July 11th and 12th. The main idea is to, of course, like I said, I'm not a big TA guy, but there is I don't want to miss out on opportunity to learn, if it is available for free. So I do want to go and attend that. And if you're attending this, give me a shout out, and we can meet in person. Again, the idea is to go and meet other investors, see what they are doing and other stuff, right? There's another one which is from
Hey,
Taste.
Vivek.
Sorry.
Hey, Vivek, where do you sign up for that event? Do you have a link or something you can post?
2 weeks ago, I shared that link. Just Google it saying Charles Schwab events. It will take you to the events page of Charles Schwab. And they do
Okay,
it
fine.
in many cities. So I just picked up the Santa Clara one.
Thank you.
Okay. Similarly, if you go to say Tasty Trade events, it will take you their events page. And they are coming to San Francisco on September 5th. Those who were talking about that you want to learn about options and all that stuff, this is where I learned all my options. I've been following these guys since 2016. I've been a customer of their brokerage firm since 2017, right from day one when they launched a brokerage firm. I would say this is the best place to learn. Everything is for free. So anytime when they're in a Bay Area, I do go and meet them to just thank them. So they are coming here on September 5th. I know I met Jay before and a few of other folks who from our weekend gathering. So if you are attending this, let me know. We can get together for coffee after this. Couple of events coming up. Any other events? Someone else saw in a Bay Area, bring it up. I will love to attend these sessions. Dave, I met Tasty guys in real person. Yeah, I think every time they've been Bay Area, I'll go and meet Tom and Tony both. Okay, there were a few questions from a previous session. I was just going through the chat and say, did I miss some of those questions? So one was nuclear energy related stocks, right? So let me just bring that up. So I did create a watch list around nuclear energy related stocks, Constellation, BWS Technology, CCJ Chemical, Liu, UUUU. So these are the stocks that can call it as a nuclear energy stocks. Oh, sorry, I'm not sharing my, oh, jeez. I've been talking and didn't share my screen. Okay. Now you know why you guys were asking me where do we see what. Okay. Pankaj says register for Santa Clara event is closed. No, they haven't even opened yet. So it will take, because today morning I checked, it will take you to Eventbrite and then say, it said that the tickets will open, tickets go live on July 5th. So I just put a reminder on Eventbrite to send me an email when the tickets open up. So Pankaj, oh, maybe you're looking at shop. Sorry, my apologies. Yeah, shop might have closed. That is true. So I got confused. I thought you're looking for the tasty ones. Anyway, so now I'm sharing my screen. So let's get back to the energy stocks, right? So I pulled up a list of energy stocks, including, so I think the nuclear energy was in news. I think was it not this week, but the week prior, because US had, like, there was an executive order saying, hey, we should go all in into nuclear energy or something like that, right? And we saw all these nuclear energy stocks, they pumped like anything. So so I did pull up some of these stocks which you will generally call as a nuclear energy stock. And let's see, let me just see and give you my thoughts on what these are. So quickly looking at in terms of revenue, I think I'm only interested in top three, right? Others are very new to this space, right? And again, other than top three or four, there's not much from a business point of view, right? The stock could have done great because, hey, we are looking at what might happen in future. But otherwise, if I look at it, I might only just focus on top three or four. So for everything else, like SMR is a small modular reactors, which is what we are focusing on. If you want to really increase the nuclear energy in US, we will have to start building those smaller reactors rather than those big giant ones. And SMR is one of them. Constellation Energy has been on tear earlier because of let's say if you look at last 5 years, it was on tear because of a lot of deals that they've been signing with these big tech companies, because all of them will need a lot of energy for AI purposes, right? But that's a stock price. But if you look at from a revenue perspective, they've been kind of not growing much. So it's all about a future growth that the stock price is currently pricing in. From a revenue perspective, for last 10 years, they're pretty close to where they were. And I mean, this is what you would expect of a utility company, right? Utility companies are not the not the tech companies or the highest revenue earner companies, but yeah, they are the regulated space. You generally have the standard demand of energy which doesn't fluctuate much, and it will grow up whatever a few percent every year. And but over the last few years we have seen the because of AI, the demand is increasing, and I think that's pushing up all these nuclear energy stocks higher, right? So, but I would rather stay away. Again, it depends on what portion of a portfolio you want to allocate, right? When I'm looking at it, I'm looking at, can it become a core part of my portfolio? So consider my answer assuming that one, right? I don't think I want to put up any one of these into core part of my portfolio, where none of them can survive without outside help. You see anything below that, they can't survive without outside help. When I say outside help means maybe a favorable fiscal conditions, favorable monetary conditions, right? Easy availability of loans. Maybe they need to sell the stocks more to raise funds because they're not generating any money from their operations, right? And so if I were to take, let's say U or SMR or URG, whatever, if you look at let's look at how their stocks have been doing, right? It's a change year to date. It's 78%. Right? Oklo is 148%. Maybe I'll put my gambling money in this. Oh, because oh my God, it's up 90% in a year. Why should I not be in? Come on, there's a stock has gone up 90%, but I don't see SMR business as that great. So it is pricing a lot of a future growth. And when you're talking only about things, what it might happen in future, which you don't know, I don't know what might happen in future. So for me, it's yeah, this is the gamble I have to take. It's like a VC kind of investing. I'll spray and pray. I'll spray my gamble money across many of these and pray that one of them become really, really big, right? Dave is XLV. Dave said, I've been holding XLE for a few months now and still a red. I own XLE because I'm not I don't have too much expertise into analyzing the energy stocks and the patterns and, how the stuff works. And of course, it's also comes into regulated space. So I just go via a ETF. So I own XLE, which is more on they have a bigger concentration of fossil fuel companies, but it's fine. It works for me. I need that to diversify my portfolio. I don't want to own everything tech. I have a huge concentration in tech. You will see my portfolio today, top 15, right? Today is almost end of a month, right? So I actually cheated a little bit because today is the last day, but the stock market is closed today, so price is not going to change at the end of a month. I show you my portfolio pizza, so you will see what are the top companies I own. So XLE gives me a little bit diversification. Is XLV time to add or still more bloodshed due to healthcare policy reform? No one knows around that. So I did have a short put spread on XLV. I think I closed it profitably. Not sure if I have another one. But again, healthcare is a regulated space. Government, any decision of government could move the stocks by a lot. So you have to be okay with that. And if you don't understand individual companies, might just stay with ETF. Yeah, Jose, go ahead. You had your hand up.
Yeah, just wanted to say, so I'm actually into the uranium stocks. I own a couple of them, and I've gone pretty deep into the commodity sector and just kind of how it works. You're right, like the big caps are the safest, but I think another thing too that kind of gets overlooked is that some of these royalty companies, like UROI is a royalty company, and those are kind of a good way to hedge against inflation for operating costs, because they literally just get paid from the mines. They're kind of like banks to like these smaller uranium mining companies, and then once the site goes live, the company has to pay them a royalty from the site for the rest of the life of the site. So they don't have their operating costs are like non-existent.
Got it.
So if like inflation goes up, they're still gonna like it's not gonna affect their margins. You know what I'm saying? Like so that was like one of the nuances of that sector. And then yeah, like the small ones for sure are super risky and speculative. And the way that those ones usually work is like they're never going to be profitable. But what happens is if they find like a big deposit or whatever, like they'll just end up getting acquired, and that's when the stock shoots up. You know what I
Yeah.
mean?
That
And
okay.
also when there's a bull market, even the non-profitable ones will go up just because bull market.
Yeah. When there's a
Same thing
bull
with gold.
market, everything goes up. Right.
So it's like the gold companies, like gold's running up, like that kind of stuff. Like once that stuff happens, like they're all gonna go up. Same with uranium. I think uranium's probably gonna happen after maybe after gold. Like it's kind of lagging, but like
I think
yeah,
so.
like
I think our chart around, if you miss the gold rally, Dash is another bandwagon you can jump on, and it's not uranium. Maybe we'll discuss that today.
yeah. So that's all.
Yeah, thank you. Yeah, so royalty business. Again, I don't know in terms of how much a royalty, but I did then there are a few businesses which operate on the royalty business, which then it's more like a bond like instrument, right? You can replace with your fixed income, not expect too much of a growth. But yeah,
Well, it's a good way to make a lever bet on uranium going up without the inflation risk. You know.
right. Cool. All right. Let's look at let's move on. So that's on the uranium. There was other question around, hey, how do I connect? I know if you had messaged me on Meetup. One is I'm a little more active on Twitter or X, call whatever you may. So if you're on that, you can ping me there. Um, you can email me if you want to.
Vivek.
Yeah, one second. And lastly, there is a Slack channel. I know a bunch of you are on that. Again, it's not too noisy, but if a question over there, put it in. I sometimes share, the links to earnings call or something other interesting stuff that I found. Again, I'm not too noisy. I don't intrude in people's lives too much. So it generally stays pretty calm. But yeah, if a question like I think was yesterday, day before yesterday, someone posted, I'm seeing hard to borrow on one of the stocks on my platform. What the heck does that mean? Right. So then, I responded, hey, this is what you mean. And if your trade, one of the option trade leg, if you can end up into short stock position, then you'll better watch it closely and all that. So these are the ways we can connect, offline or asynchronously outside of this Saturday meeting. Sorry, Samuel, you were saying something.
Yeah, I think I find LinkedIn dialogue a far better quality of people.
Yeah, I
than
mean, I've seen both
Twitter.
on because LinkedIn, my network has always been my work-related network, so I have a lot more connections on the technology side. And when I started my account, I mean, account on Twitter has been there for pretty many years, but I only started using it in Q4 2023. And that I used to follow, and then I started following all the investing related people. So I get a lot more feed. The AI will tell me a lot more investing related content on Twitter. LinkedIn, all the suggestive posts are related to the tech field. Though now I'm trying to connect to a lot of folks on the investing side on LinkedIn, so hopefully my feed will improve. Okay. Uranium resource royalty companies are okay. Based on revenues, not profits, so price of uranium goes up. They see the upside. That's cool. Good information. Thank you, Jose. Dave, who's your buddy that used to have Sunday trade talk sessions, start to run LinkedIn live sessions? Or now he's running LinkedIn? I don't know. Does he still do sessions, Kay?
He blocked off everybody.
Okay.
Yeah, paywall.
Okay. Maybe he's not making money from investing.
Oh, the depression. He took a big hit.
Yeah. This is what happens. I've seen many investors will be investors of the year or investor for a season. I'm not focused on getting the best returns. I'm focused on being in the game for the longest. So don't ask me that your another friend has made 50% this year. It's okay. Let him make. I'm not jealous. I just want to be here for the longest period of time. Right. And I think I used to attend case session like in 2021. I stopped attending once he told you could take second mortgage on your home and put it in the market. I'm like, okay, I don't want to, it's a completely different way of investing. Does not for me. Anyway, I think there was one more question from Johnson last week. Don't think Johnson is here, so I'll skip that. Jose, everyone is genius in a bull market. Yeah. And I've seen I think also people on Twitter or YouTube, some of those YouTubers have disappeared, who used to talk a lot about how great they are on an options and all that stuff. Some of that actually got sued by FTC because they never made money on options. All they made money was selling you the courses and displaying you the private jets and the mansions. So FTC sued them because none of them made any money using options. And some of them just disappeared because, hey, 2022, washed them out. So, hey Vivek, I see my question that you have any good advice for me on YouTube transcriber. Yes, I did put up that. I have not yet looked into this question. I saw today morning, so I still need I need to research on it. The reason why I put it here, has anyone else used it? It's a great ask. Many of the YouTube I think if you use Notebook LM, and many of the YouTube videos also have auto transcription, the Notebook LM can actually provide you summary. I think I have used that once, not too many of the time, but I'll have to Google it to see if there are services in which I can give multiple YouTube links, and then it will provide me a summary completely. But I think I've used Notebook LM to provide a link and say, give me the summary from this. And that YouTube video had an auto transcriber. Dave, I know I can use some Python library. I'm lazy. See, 85.
Yeah, 85. I use that to transcribe the YouTube script, and also it can summarize what the YouTube is talking about. So if you have like 30 minutes or 1 hour long YouTube, you don't have time to watch all of them, so you can use 85 to sort of summarize the main point. Yeah, but it's a paid tool. Yeah.
Yeah. Okay. Cool. All right. So I think these were the open questions that I could get across. Let's dive into ARK Big Ideas. So like I said, last week we covered the two topics, AI agents and Bitcoin as a global monetary system. Maybe today we're gonna talk about next three topics, stable coins, scaling, blockchain, and robotaxis. And then there are a few more, which I will leave it for the next session. You get bored by if we just continue on this one forever. So let me just go to stablecoin section. And of course, this is, I think, a great time to talk about stablecoin because we had Bitcoin 2025. So I do not have any details of Bitcoin 2025 in today's session, but because I have yet to go through what salient points, something that's really useful in the long term, and then probably I'll summarize those findings in our next session. So let's continue on ARK Big Invest. So stablecoins is the only killer app that I currently see available in the market when it comes to crypto economy, right? Bitcoin has been around for 16 years now, right? Other than the store of value, nothing much has happened. Of course, there are transactions happening. There are Lightning Network. There are Stacks, which is trying to do NFTs and basically write smart contracts on top of Bitcoin. But these are all experimental mode, right? Lightning Network hasn't caught up just yet as much as we thought 5 years ago it would catch up. Only thing that I see on is stable coins. NFTs have gone 2021, there was a craze, then it died down. You know, a lot of stuff has, you know, ICOs came in 2017, then everyone got sued by SEC. That has moved around. But stablecoin is the one which I do see still being used. And actually tell someone that this is a use for this crypto economy, right? So it's one of the fastest growing segments in digital assets. Stable coins over to MasterCard and Visa in transaction value in 2024. The overall value hit 15.6 trillion. I'm not getting into the nature of those transactions, right? Someone could be wash transaction, me trying to move money from one of my Coinbase account to, let's say, a Gemini account. I don't want to move let's say Bitcoin or Ethereum because you don't know. I mean, I just want to hold it and I don't want it to lose value. I'll basically use stable coins to transfer it, right? So, but that doesn't add any economic value. So I'm not getting into the details of, I don't know even has anyone even done the research to figure out how many of them are just transfer mechanism versus adding real value. But in any case, $15.6 trillion of value being transferred is a number that you can't just ignore it, right? And the number of transactions have been increasing, whether bull or a bear market, right? This is important. When bear market of 2022 came around, NFTs transactions just dipped. They crashed and burned. Go and look at our OpenSea transactions. Go and look at which was other marketplace. There were two big. OpenSea was one, and I'm now missing the name of another one. Right, the number of transactions on those NFT exchanges went into the drain when the crypto's winter hit, right? But stablecoin has been pretty stable. Volume hit record high in December 2024 because there were stable coins launched on Solana, Tron, Ethereum, and Base. Base, which is from a Coinbase, has been growing like crazy because that's like layer 2 from Coinbase, right? Ethena Labs had tokenized a popular basis trade. I didn't know about this Ethena Labs, until I read this report, but to me, it just looks like a yield sharing and nothing more. So maybe ARK is hyping up more than what it should be, but 12 months, $6 billion asset under management, that's something to note about. After drawdown in 2023, the supply and the number of active stablecoin addresses hit all-time high. As some countries shift away from dollar, digital assets are moving toward it. I don't know. And if you know ARK philosophy of their projections, they are generally very, very rosy in their projections, right? So the same disclaimer I gave you last week. Don't look at from a number perspective, but view this report as a theme perspective of these are the technological changes happening, right? And then you can discount the numbers based on how much faith you want to put in Cathy Wood. So I'm not, when they tell me like it's a $30 trillion market, maybe someday we'll hit $5 trillion, right? So, but yes, world is moving towards that. So take it more from a directional input rather than literally the numbers what ARK report puts out to be, right? Their projections have been very, very rosy. Always, whether it's Tesla share price or Zoom share price or whatever, right? But they've been directionally correct. Magnitude-wise, a lot is remaining.
Yeah, but Vivek,
from
I'm
their
not
side.
clear how because stablecoin by definition, right, is tied to a fiat currency. So how does stablecoin makes money, right? I can see the way
We'll
it's
talk
used
about
to
it.
transfer value.
We'll talk about it.
Okay.
There's a chart which says which is the most profitable revenue per employee. It's a stablecoin company, and I'll tell you how did they make money. Right. So hold your question until then. So China, Japan have been selling record number of US treasuries, which is right. Saudi Arabia entered the petrodollar agreement, which is also right because they agreed to sell oil in yuan. And BRICS nation have their reduced reliance on US dollar payment, which is also right. But US is still the dominant, I would say, global currency, right? But the dominance has been coming down from 80% of global trade happening in US dollar. Now we are down to 60%. So it's a big ship. It'll take a lot of time to sink. So I'm not painting doomsday decision for, let's say, next year or so. I think from my investing life, maybe dollar will still be prominent. I can't guarantee for my kids. Okay, so they have to figure out what else to do. But I don't have any evidence that the countries are dealing in stable coin. So this is little ingenuous to saying, hey, they've been reducing their dependence on treasuries, but they're trying to divest from, basically have euro reserves, have yuan reserves. Only very few countries are having yuan reserves, especially the Belt and Road countries. But majority of them are trying to have a more diversified portfolio. A lot of central banks, they bought gold in 2023, 2024. They will, piling up a gold reserve because they don't want to depend just on US after what we did to Russia. So dollar-pegged stable coins dominate. There are some gold and euro-backed stable coins, but very small. They're attracting retail invest, which I agree. If you have to transfer, let's say, this assets, you would rather convert into stable coin and then move it around. Peer-to-peer transactions and personal wallet storage dominate stablecoin use cases. Lot of use cases in Africa and a lot of use cases on the remittance side. 4 stablecoin issues dominate, right? Tether, Tron is mostly in Africa, or in the develop, or I would say the countries where you have a hyperinflation. If you were to invest in something which will hold its value, stablecoin is something that you can depend on, right? Let's say if I'm a resident of Nigeria and they keep on devaluing lira whenever, no, lira is Italian. So what is Nigeria's currency? I'm missing this. Anyway, so take example of those African currencies where the government will devalue its currency. If I'm got my salary, I'll immediately convert into a stable coin, at least Naira, not Lyra. Sorry. At least that value stablecoin retain its value, right? So, and then if I need to transact, I convert my stablecoin to Naira and go and buy whatever I need to buy, right? I'll get more Naira when I convert it. So Tron is mostly outside of US. USDT is these crypto bros or crypto gals who are trading and active on the DEXs, and when you move your asset from one to another. USDC the same play. So these are 4 big ones. USDT is the largest one, and there's another chart which shows now it has become a big player in holding US treasuries, right? This is where some ask a question around how do they make money. Tether financial performance stunning. This is basically net income per employee, right? Tether had made the most net income per employee. Now, the way they make money, at least last 2 years, they just buy US treasuries and US government pays them 4.5%. Right? And they have like 200 people. And overall, let's look at Tether. How much is money in Tether? I'll go to CoinGecko and we'll look at how much money is in Tether. 50 billion, market, $153 billion. Right? Take a 4% off it. That becomes what, $6 billion? $6 billion, there were 200 employees. Let's assume that they don't put whole of $153 billion. Let's say they own some gold or some other commercial paper. It's not audited, but I think Cantor says, and which is a very well respected firm in Wall Street, that they actually do have $153 billion of assets which are actually backing this stable coin.
But how do they? Why is the U.S. government paying them money?
They bought US treasuries. If you buy US treasuries,
Okay.
right,
Yeah.
you are lending it to US government, you get interest. You make $6 billion and you got 200 employees, right? Now,
So you sell the stable coins to somebody, like whoever buys it, and then for the money you buy US treasuries. Okay.
yes, right. So now the stable coins are very quick to move. You basically you use the underlying blockchain technology to just transfer the ownership, which happens instantly, right? I can't do on dollar on ACH network. That will take 3 days, right? And right now they're making 4.5%. Probably they have a small portion of commercial paper also, but 200 employees, they don't have to do much, right? So all they need to ensure is that they have a well-established assets backing this USDT. So that's why. And this is given the fact that the interest rates are 4.5%, it's such an attractive business. And House has passed the Genius Act, or sorry, yeah, the Genius bill. I think it needs to be voted upon. Whatever, it has to go through the regulatory, our legislation, and then the Senate has to do it. If the stablecoin bill is finally signed by president, all these banks will get into it. They already started talking about it once the House has kind of a green lighted the Genius Act, right? Go and search for a news on. Let's do that. Banks in stable coins, banks getting into stable coins, right? So all these banks are now exploring, working with the fintech companies to get into stable coins, because now the space could become regulated. I mean, banks are regulated entities. They just can't enter into a business until government gives them go ahead, or OCC tell them it's okay. Now we have regulations based on it. I would see everyone trying to take a slice of it, right? It's easy money. There are currently 243 billion of stable coins. The Tether is 153. You got a USDC, you got a Tron, you got a Base. Many companies are trying to get into this, right? Counterbalancing de-dollarization, right? On one side, we looked at that, hey, the dominance of dollar is decreasing because some of the other countries are dumping US treasuries, not dumping, but selling off a US treasuries or not renewing it. China, Japan. On the other side, if our regulation says that you need to hold equivalent of a US treasuries if you are issuing stable coins, and all these banks get into it, so there'll be demand for US dollars, right? There'll still be demand for US treasuries. So this will counterbalance some of the de-dollarization. So right now, look at it, US Tether and Circle. This is as of end of December 2024. So right now we are almost about 5 months into it. This would have become much bigger. They were like a bigger than many countries in the world holding US treasuries. And now they're transferring risk-free rates to user. They can't do it in the US, the stablecoin issuers, because the stake or the yield, it becomes a security if you do that yield. So those laws have to be clarified. But outside of the US, there are fintech companies who are dealing in this outside of the US and basically giving the yield to the holders of stablecoin. I'll skip this. So second topic is scaling of blockchains. Right? Applications seeking lower fee and greater efficiency deploy either on Solana's high throughput layer 1 or on Ethereum layer 2. These are the two main ones. Is what else? Yeah, I think the most of the market has been cornered by Solana and Ethereum when you talk about transactional use cases, right? Bitcoin has got a just buy and hold use case, which is a store of value. If you're to build decentralized financial powerhouse, you got to build on smart contracts. Solana and Ethereum are the biggest one. Over the past many years, watching the space for a decade, you will have seen many others, Avalanche, Cardano's of the world. You can go and look at, if you look at whatever the top 20, which are the other ones, layer ones? None of them. Cardano is number 10. Then you got Avalanche is here, Stellar. Nobody talks about these anymore. Stellar, Polkadot, right? Gavin Wood, when Polkadot came around in 2021, this was hot because, hey, it's another founder of Ethereum. Same was the case with Cardano, but majority of the mind space as well as developer space has been taken by Solana. And of course, Ethereum has been there for the longest. And then there are layer 2s on Ethereum, Polygon, Base, Arbitrum, Optimism. There are a few more. I saw some fissures happening in Polygon, co-founders quitting. So I don't know how great it will continue to be. But if you're building applications, you will either directly use Solana or use Ethereum through some of these layer 2s. Ethereum has been trying to scale. 4884 happened in Duncan upgrade to reduce the fee and increase the transaction speed, because they are saying every developer going towards Solana, right? And then if you don't have a vibrant developer community, then yeah, you had an early mover advantage, but then someone else will take you over, right? And then as we discussed during the Pactra upgrade, which happened earlier this month, there are a few more additional stuff happening in Ethereum ecosystem to make it faster, cheaper, quicker, ability to store more data at the layer 1 itself. Currently, you can do it on layer 2, but at the layer 1 itself, a lot of work happening. Yeah, plummeting transaction costs have led to a boom in layer 2 activity. I remember, earlier when you used to transfer from one wallet to another, you were transferring ETH, you had to pay like $90. Sometimes I paid $100 in transfer. Now you can get it in a few cents, which is still high. It should be a fraction of pennies, right? I would still consider a cents, few cents as a high fee. But yeah, things have improved over a decade. Base is the fastest growing Ethereum layer 2. If you want, Base is from a Coinbase. So if you want to get some exposure, Coinbase is publicly traded in US exchanges. Despite migration to layer 2, Ethereum base layer still dominates, yes, but it's become more of a settlement layer, I would say, and the storage rather than more of a transactional layer. All the transactions happen on layer 2, and then they will final result they will set on a layer 1, because doing transaction directly on layer 1 is slower, more expensive. Maybe after the next upgrade, which is, I guess, is Electra, it'll become as fast as, let's say, Solana, etc. DeFi surged to all-time high. DEX challenge the centralized venue. Centralized means the Coinbase and the Gemini, etc. in both the spot and the derivatives trading. Smart contract powered exchanges are 5 to 10 times more efficient. And these are some of the smart contract exchanges. Liquid staking and restaking protocols, a preferred solution for staking, rehypothecating ETH. But I'm a little scared of this whole rehypothecating stuff. So basically, rehypothecating is what happened during the mortgage crash in US, right, in 2008, etc. So you open up a mortgage, your mortgage is packaged and then sold to one investment banker. They will package some of those and sell it to another one. So it's getting rehypothecated to multiple. Now this got like a multiple financial institutions have an exposure to one house that you bought. Similar stuff you can do it. You can't do it in the US side yet, but on the DEX you can still do is stake your Ethereum, and then you get staked ETH in exchange. You can take your staked ETH, go to another protocol, and so when you stake your Ethereum, maybe you get 4% yield depending on which protocol you're staking at, and then you, as a proof, you get those staked ETH, which is a proof that you own the Ethereum which you have staked in a platform. You take that stake ETH, go to another platform which is giving some more yield on the staked ETH. You stake it there, and you start the domino chain. But we have seen these dominoes falling off when in 2021 the Terra Luna broke, that blew up, and then everything else blew up. So I'm a little scared of this one. But it is what it is. People they want to do it. Go at it. It's a free country. Led by Polymarket, prediction market became the breakout consumer application we saw during the elections in November 2024. Right? Solana throughput is higher than Ethereum, which is true. Now, there are questions around all the transactions around Solana. Many of them are validated transactions. Again, I'm not getting into the nature of the transactions, right? Like, hey, those real transactions or not? Who knows? But the fact that there are a number of transactions that are happening per second are way higher than Ethereum layer 1, that is causing Ethereum technologists to take note of it. Thanks to retail adoption in 2024, there's a meme coin mania, right? Pump.fun, and there are many other websites that will allow you to create your own meme coin at a click of a button. And there are hundreds and thousands of millions of meme coins now available, and people like to gamble. Create a meme coin, go and talk about it in Twitter or whatever, the Discords, and pump it up, and few fools will follow you. Suddenly you will see, oh, momentum is going there, few more fools follow you. You sell it, move out, wash your hands off. Seen this hundreds of times. But people only learn if they lose money. So you want to go in that, all power to you. I don't do that stuff. But that's a retail adoption came all from meme coins. Retail is not in Bitcoin yet, at least in this summer season. They're still waiting and watching. This whole Bitcoin rally that we have seen all the way to 110, now I think it's back to 105, has been driven by institutional adoption. Solana and Base leading the way. We talked about it. And did we have to cover robotaxis today? Or maybe let's talk about robotaxis, or we'll take the robotaxis next week. Okay, so it's a, I would say, good demarcation between Web3. Now we're gonna go back to our own regular economy from next week. So that's on ARK Invest. We'll continue on this one next week. Gives you good idea about where the new tech and where the things are moving towards. Again, take it only from that perspective. Don't get hung up on the numbers. Numbers are all over the place. Any questions? And they at the start of the year, not exactly at the start, I think maybe March, April, they'll come up with, every year they do publish big ideas, and I've been reading it 2021, 22, 3, 4, now 2025. Jose, once government regulation clarified on stablecoin, the market will take off. Yep, that's what we talked about. There are two acts, right? Stablecoin Act and the Genius Act. Good. All right, let's move on to the next one, which is Microsoft Build 2025. Again, this was more, when I was reviewing some of the videos, that's unlike Google I/O 2025, which was had a lot more consumer friendly stuff. Microsoft Build, as the name suggests, it is for builders, right? So there are a lot of techy stuff that was presented in their Build 2025 event. So I will quickly run through some of them. If you have questions on it, maybe I'll have an answer. Most probably I will not have an answer. So we will go back and find out the answer for you. But at least give you some idea of what did Microsoft reveal in 2025. A lot of focus on open scaling, right? Traditionally, no one considered Microsoft to be a champion of open source. Only over the last few years they've been trying to change their image. They bought a GitHub, and now they're focusing specifically around agentic web and open and scalable agentic web. So also they provide some updates on Visual Studio. Visual Studio is Microsoft IDE development environment. So it's got a new .NET support, new debugger for cross platforms. They moved into monthly release cadence and shipped hundreds build of VS Code in open source community. Again, trying to open source some of the Visual Studio code. GitHub, which is again open source, continue to be home for developers. Copilot is now, there are updates on Copilot. It's been also open sourced in VS Code, right? There was a demo of autonomous SRE agent, which is site reliability engineering. So currently these SRE roles are performed by engineers, right? You go to LinkedIn, search for SRE, you will see a lot of job posts around SRE engineers, basically, which will make sure your applications, your website run fine. That means test, all that need to be done to have your cloud application don't crash comes under the whole SRE stuff. Now, there's an autonomous SRE agent, right, which will monitor your application, figure out where there be maybe bottlenecks before the bottlenecks happen. Memory consumption is going high, maybe log a issue. So it'll find the issue, log it in GitHub, and start working on it automatically. I hope before it pushes the code in production, there will be a check done by a human engineer to make sure everything is fine. But the day won't be far away when it will automatically push the code, create a PR and a pull request from GitHub, change the code, merge it back in, and then push it out to, of course, staging and to production. Right? But, so if you are an SRE engineer, right, an agent is coming for you. So you got to upgrade your skill. Maybe use this agent and fix more issues for your company than what you were fixing earlier. Become more productive. Coding agent, from peer programmer to peer programmer, right? So far, we've been talking about either use Copilot or use Gemini or Claude or any of the Cursor, any of the other coding AI platform. It'll help you to code faster, right? Now, so that's like a peer programmer. It has to be paired along with a human coder. Microsoft Build, they talked about a peer programmer, right? It can work on the side. You can assign issues to the agent. Let's say your product manager comes and I found the bug in this product. They log an issue, and then you can assign that issue to an autonomous AI agent. It will basically go check out the code, fix the bug, and check it back in. It's now a peer programmer can work autonomously, right? A lot of features they talked about. Micro 365 Copilot, basically, which is a UI for AI. Satya wants to talk about always. Chat will have, so that under 365 Copilot, the chat will have your enterprise data as well as the real world data. So it'll be a combination of both. And of course, they emphasize a lot on enterprise security. So, and Microsoft, as you know, they've been big on the enterprise software, right? Been there for decades. They understand that space really well, right? And unless the 365, that AI search, it works across all your data, right? Not just the data stored on Microsoft products, but Jira from Atlassian, Confluence, which is again from Atlassian, they bought it, OneDrive, Google Drive, so Slack. That reminds me of another company which is called Glean. I think latest they raised $2 billion. It used to do the same thing. I've used Glean products when I was working for a company, and I was really impressed by it because I could go to Glean and give a search term. It will search from my Google Drive, search on my emails. It will search to the Slack messages. It will search through Confluence and give me all the links of where they searched term occurred. So when I was listening into this Microsoft 365 Copilot, I'm like, one more company getting eaten by AI, just like Check got eaten, right? Notebooks can create homogeneous collections using chats, email, etc. Researcher agents, right? This is again like a deep research from Gemini, does a similar work. Now you got analyst agents. So now we're seeing a vertical agents being created for different kind of workload or industry. Right? You want to get deeper into pharma, drug discovery, use a research agent. Right? For a person like me, I want to analyze the company or run business analyst, I might try to look at analyst agent. And then you can build your role agents, which will show up in your teams and in your Copilot. Right? I build, maybe you have developers who are building agents, then releasing it for everyone else in the company to use it. Right? They talked about Copilot tuning, which means you can tune the Copilot to learn and mimic the behavior of your company, right? The unique things about your company. So when the Copilot is writing an email to your customers on your behalf, it's actually using the words that generally is being used in your company. So maybe you don't call it as a wiki page, you call it as a workspace. I'm just throwing some my names, right? So if you want to use the name wiki page, but it'll start using the workspace, you can tune it to learn the tone, linguistic choices, etc. of your company. Right? You can seed the training environment for Copilot with some of the references and it'll take it up. Again, I think it's too much. It won't happen by really giving a few documents, but it's a start. Then they talked about the agent store, just like you have an app store from Apple and Google as our Play Store. Now I got an agent store. You can create an agent and release it for the rest of the world. Then they talked about their AI Foundry business, in which basically on Azure, so a lot of new models available, almost all, OpenAI, Grok, Mistral, and then every different version. They have like almost 11,000 models. You have a Foundry agent service. I'm not a LLM developer or not a coder, but I can basically, they'll let you build agents using vibe coding, right? I can specify in English language what I want to do. Someone can, so the agent service will build an agent for me, right? Things like healthcare agent orchestrator, which is already there. Now they have, it is generally available for all the customers who use it. They've added new observability features, right? Observability is similar to, they basically observe what's happening with your data. There are many companies which do only this work, right? Then you got agents will have an IDs like humans have their own IDs, so that if an agent does a work, they need a data from your company. Now you can define your data governance rules, which will all be in your Microsoft purview. And then the Entrada, which is another Microsoft project, Entra, will assign so at the end of the day, your agents, all the rules that apply to human developers or human employees in terms of what they can access, what they cannot, they'll apply to the agents as well. Right? And the day won't be far away when they will be hiring technical manager, and the job of technical manager is not to manage other developers, but to manage the agents. I don't think that future is far away.
Yeah, even with coding, right? Now you have vibe coding and all, right? So
yeah, I mean, don't put a vibe coding and go on LinkedIn and say build an app with this. People are out there to kill those, especially those who are very purist coders. They're gonna come and slam your application, especially if it's a web app, with all the DDoS and all the stuff. It had happened with one of the founders, right? A techie founder came and said, hey, I vibe coded and put it over there. And then he suddenly realized that he's been attacked from all over the places. It could be a nefarious attack also, because vibe coding is still not at a place wherein it'll take care of all the security and scalability and all that. It's good for POCs, I guess. You don't need to hire an agency to build HTML mockups or build a working demo for, let's say, a web app. You can use vibe coding to do that, but I don't think you should be putting that vibe coded application in production. Not just yet, but yeah, we may not be far away. I mean, maybe in a year or two, these things will become so intelligent that you tell them this is my customer, target customer, they'll figure out how much a peak load, etc. could be, and maybe change the code to handle all that. And maybe spin up a clusters in AWS to add additional capacity. The future is going to be it's been amazing. And then again, Microsoft Defender will integrate Foundry so that if you're building agents, they are protected like any other assets in your company. They also announced a local version of Foundry, right? You want to have that same Foundry run on your local machine. You can run it locally on Windows and Mac. I'm trying something or I don't want to be connected to internet and run it on Azure. I want to just do it on my own small experiment. Yeah, I can do that. Then they talked about integrating Cosmos DB directly into Foundry and digital twin builders using low code, no code. Or maybe I should now add it to vibe code tools. Right? And then they announced new product called Microsoft Discovery. Now, again, the Discovery is one vertical focus towards companies which are spending a lot more in research and development efforts. So how you can do it faster, cheaper, more efficient, use some of these research agents, right? And then they're kind of building the whole product around those research agents, which will help. I guess there will be a lot of a demand if it really works the way it is, like pharma companies, which spend a lot of money on research. It's a good customer for them. So again, because Microsoft is focused on the enterprise side of the house. I didn't say anything which was in a Google we saw, right? You can try on shopping stuff. None of that stuff is here. It's all focused on how to make enterprises do their business faster, cheaper, and with an acceptable quality way. So that's on Microsoft Build. Any other questions? Dave has a question. How can we really audit that Copilot didn't store a copy of company data in their data center? Question best asked to Microsoft. I mean, at some point of a time, we do have to believe that what they're saying is what they are doing. Otherwise, they can get sued. I wouldn't believe if it's a smaller company, but let's say Microsoft or Amazon is saying something. Yeah, I would take it on the face value. But I'm not going to believe a company, let's say Builder.ai. You guys knew what happened to Builder.ai? Especially those that in AI are following this, it was all over the place. That company raised 400 or 500 million dollar. This is again one of these vibe coding platform, in which you give you a requirement and, they'll give you code, etc. Everything's ready by next day and all that stuff. They just filed for bankruptcy. $500 million over a $400-500 million raise. Let's search what the exact amount was. And I think at some point of a time, they were few $billion worth, like many of these AI companies are. And essentially, they had a lot of their sales were all inflated, right? When they were pitching it to investors, not just by a few months, but some multiples. Number two was that the tech wasn't as great as they were projecting. They had an army of software engineers working out of India and Ukraine locations. So when you give your requirements, the vibe code that you receive next day was actually coded by the help of software engineers, which probably are also using some other like coding tools, etc. So this was all messed up stuff. It was all could actually be considered as committing a fraud because you inflated your sales number. So I won't be surprised if Justice Department, it falls under Justice or FTC, whichever, right? If one of the government agencies start to investigate and put them behind bars because they inflated their sales numbers when they were raising funds. I don't know. So there are other companies like Lovable. Whenever a new tech comes, you will see many of these companies coming in. Many of them will just go away. Some of them turn out to be fraud. And then very few will be the businesses which will survive for longer term. I would rather have a more faith in Azure than, let's say, Builder.ai or Lovable, etc., right? Or Scale AI, etc. I think Dave says, I think our lives will either be a lot better in future, a lot worse due to AI hacking. So it depends on if you were to use those tools or know how to protect yourself from those. Yeah, life will be better. Otherwise, yeah, we will feel like a forgotten people. I know. And those who have been left behind, because I'm still using Abacus to calculate, whereas everyone else has moved on to Sharp and Casio calculators. All right, coming back to the markets, sector performance, we just even out for the year. Despite all these ups and downs, the blood pressure getting high, we had a huge this like a bottom fell out and then big V-shaped recovery. This is what's called as a traditional V-shaped recovery. Markets down to 480 and boom. If you got out of the market out here or somewhere here, it's going to be really, really tough. You can claim to be brave and say, I'm getting back in, but it's going to be really, really tough to get back into the market once it's back up like 20%. Mentally, it is very tough. So I try not even time the market because I can't. If I had sold out at like 500, 480, there's no way I'm going to buy it at close to 590 a few weeks later. Right? But we had a huge V-shaped recovery. Now the market is back where it was at the start of the year, which we're looking at. Where did this year start? Oops. Oh, it's here. Okay, so year starts here and then we back right there. Okay. So much of a volatility for nothing. Okay. We're back to where we started. Fear and greed index is still sitting in greed, so I will still be cautious. Now stock market is one market where people want to buy expensive stuff. Everywhere else we hunt for discounts, but stock market, and let me put say Bitcoin is also comes into the same. It is where people get more interested if the prices are higher, right? When the prices are down, when you're getting the same stock at a cheaper price, no one wants to touch it. But give me at 1.5 times of it, I'm in, baby, I'm in, along with my friends. So this is, I'm seeing everything is in greed mode. Everyone wants to get back in. And that will also show you, the number of people that show up in a Saturday meeting is dependent on if the markets are really high. Suddenly people get interested. Say, I want to be in the market. The best time is when the market was low. You're getting stuff cheaper, guys. But it's mentally, it is very difficult. So it's not easy. What did I buy or sell this week? I just bought a little bit of INDA. I don't want to buy anything, if a put get assigned, that's a different matter. But this one I specifically bought INDA to just add it to my position outside of US. Didn't sell anything else. So again, that's not a recommendation, but I want to be transparent in terms of what I buy or sold the shares when I do that, so that when I'll give you my pizza, you're not surprised, right? End of a month, I always share the pizza with you. Oops. Okay, whatever. It's not going to the next page. Who cares? So this one is April, end of April. So this one is end of May. Biggest position is still SPY. And then the second biggest is Mercado Libre. Now I'm getting a little scared about Mercado Libre because many other investors are starting to talk about it. This has been a great winner, undiscovered and not talked about stock. But now people are starting to talk about Mercado Libre. Anyway, it is what it is. Still a great business. Still want to own it. QQQ, ACHD. As you can see, I have a lot of exposure on the tech, right? Berkshire Hathaway. What have changed from previous month? Palantir and ASML have dropped out from top 15. I still own both of them, but not in top 15 anymore. And Cash and Tesla has moved back in top 15. That's a deal. I'll give you a minute to look at it. And if you have any questions, ask it. Otherwise, hold your questions for the next first session
Vivek,
after end of June.
yeah, Vivek, why are you holding Tesla? I mean, you think it's valued? I mean, I think the brand is broken beyond repair now.
Yeah, I mean, I do have a covered call currently, which is in the money.
Okay.
So, but I have always had this like love-hate relationship with Tesla, right? Tesla, you want to hold it only for the Optimus battery, maybe robo taxis, which are coming picture. Right now, the stock is high because of June. When are they releasing? June 6th or something? In June, they're gonna start the robo taxi services in Austin, right? So if you look
Yeah,
at
but Waymo is way ahead
way
in
ahead,
robotics.
yes, yes.
And the more you hear this guy, he just like talks and doesn't do anything, right?
Always been the case. He's always talk more and deliver less, but market likes it. What to do? Tesla has been a very, very difficult stock to either own or not to own. I've been out of and I only started owning Tesla when the stock was around 220. I said now maybe I can start to own it. And anything above 300, I start to sell calls against my position. Right? So currently I have a covered call. If it gets called away, fine, I'll be okay. I'll again sell a put, maybe to acquire at a lower price. I can't justify Tesla based on its car, but obviously no one treats it as a car company. It's all the valuation is coming from the future of Optimus, future of robotaxi, future of battery storage. Right? From a car perspective, the latest quarter, they would have been negative operating margins. They would have lost money if it was not for regulatory credits. Operating margins were like what 6% or something. It's a
And
hard.
in all these areas, right, there's a lot of competition.
Yeah,
And
exactly.
he's not the most focused guys, right? He's just a hype.
EVs, they have kind of a losing the ground. Europe, they have
BYD.
to BYD. US, they're protected because we have 100% tariff on Chinese EV, right?
Right.
So my investment in Tesla is not for the Tesla cars, but for everything else. And it's a small portion, like 2%.
Yeah.
And if my covered call gets called away, it will fall off from the top 15. Right? But it's a good premium. And I've made money on Tesla on an option premium side, not by holding the stock for longer. I
That
just
makes
can't justify myself holding Tesla at like $400. All right. Anything else? Any other question? Okay, Jose said June 14th. Okay, so we'll see. Maybe this is like if you look at a Tesla stock, it's a good run up on Tesla stock. Maybe this is in anticipation of these old robot taxis coming in June 14th. Will we see, buy the rumor, sell the news? Who knows? Possible. The stock has always been volatile. Right? So I won't have it as a small portion of my portfolio to sleep well. Dave, I'm interested in fundamental value analysis, what you just said about Melly. You said you're interested in value of business. Be shaky about Melly due to short-term fluctuations. No, I'm not shaky about Melly or short-term fluctuations. I'm saying getting little concerned because when the news channels and they start to talk about it, Melly, then different kind of investors will get in. But I'm going to hold my Melly for another 10, 20 years. I still like the business, still is a great company. I'm not going to sell her, but I expect to see a lot more volatility And if that brings in a lot more liquidity, it'll be good for me because then the option will become much tighter. But it's like a $2,600 stock. I don't think unless they split it, I think most of the retail investor is probably sitting out of this. But I was watching Professor Damodaran's address to CFA Society of Argentina. He did a valuation of Melly, right? So I couldn't find. Yesterday I was trying to search on his blog where is this valuation of Mercado Libre, because he did mention that he's gonna do Mercado Libre, Palantir, and BYD. So at least I saw that he has finished Mercado Libre. I couldn't find his valuation, but I did my own, and I'm okay to holding it at $2,600. I mean, it is expensive if you based on what I think the company will do, which I don't know if I'll be right or not, but it's not egregiously expensive. It's a great business. Taco trade. Yeah, we should talk about taco trade. What? No, this is Thinkorsim has gone for sleep. SPY. Okay. Why did Melly didn't show up? Okay, whatever it is. Who cares? Tesla has a good volatility, high option premium. Very true. EVs out, hybrids are in demand. Yeah, I can't agree more because 2024 we were debating between EV and hybrid, and eventually we ended up buying hybrid. At least I have the charge phobia, and my kids know that if my phone is charged 30% or less, if it reaches 30%, I'm like, I need to charge more. And they're like, Dad, okay, 30% is good enough. I'm like, no, I need to charge more. So for me, buying an EV, I need to have the charging station and at many places. He paid the price for supporting those. Yeah, we saw some political backlash. He's also on drugs. You've been holding Melly for at least 5 years. Yes, I think 2018 or 2019 somewhere. Yeah. My first purchase on Melly was around $360, $350, something like that. And then, of course, I bought it at multiple other price points. And I still like the company. I've been holding of stocks and doing just short-term option trades with waiting for next wall spike. Yeah. And same here. Those who traded options, is it just me, or did you find that the bid-ask spreads have become much wider? I'm not even talking about individual stocks. I'm talking about these ETFs, which I generally want to focus on, is these all X ETFs, right? XRT, XBB, XLKs, straight street ETF, pretty liquid in terms of the ETF volume perspective. But when I was looking at, let's say, the options, oh wow, those are like very wide. I'm like, what the heck happened? I've traded these like in 2018, 2019, 2020s. These had a pretty tight bid-ask spread. Now I'm seeing a bid-ask spread which is as wide as 50 cents. I'm like, what? So I wanted to, because right now I'm underutilized my portfolio. I'm only using 25% of my buying power, but I didn't want to add a lot more delta. So Friday I was looking at maybe add some delta neutral positions on some ETFs, liquid ETFs. But then I was like, dude, these are, and I was trying to build July expiration portfolio, and I'm like, these are very wide. What the heck is happening to these? I don't know what's the reason behind it, but I found it more, I would say, I was surprised by it. That some of these ETFs that I had traded earlier, I mean, I have such a wide bid-ask spread. Okay, right now it's all simulated ones, so I can't even say it. How about Instacart stocks? I mean, you're talking about Instacart as a company, that stock of that company? Yeah, I don't own Instacart. Delivery is a tough to make money in delivery business. Yeah, so the business is tough, but INST. What's Instacart? It's cart is CART. What's yeah, the revenue growth is tipping down and it's a low margin business. So just delivery, again, I'll say the same thing. It's a zero brand loyalty as a consumer side. Instacart has got a partnership with Costco and all the stuff that's working good, great. But as a consumer, you have a zero loyalty. You don't care who delivers your good. Instacart, Postmates, Uber Eats. So it's they don't have any moat from a branding perspective. They do have an early mover advantage, but yeah, I'm not interested. The business, again, I've not looked into the fundamental side of it, but the industry itself is a race to lower and lower cost, right? As a consumer, given a choice, I will download the next app which will deliver me cheaper from the store that I want. If we can deliver me cheaper than Instacart, there goes my loyalty. So that's the reason. I mean, you can play with it. M&A is there, yeah, sure, but I don't want to invest assuming that in the future there will be M&A, right? Especially when investing is the only source of income for me. Yeah, if I had a job on the side, if I was still working on the side and investing is like, hey, it's a fun money to play with, sure, I can put something on Insta. Right now, I've become very conscious of how I deploy my capital. I need to pay bills. I have a kid to put through college. And so it is filling the gap, yeah, with students. All I'm saying is, why can't Uber is not disrupted? Like, what's the moat? They're the biggest one. Sometimes the network could be moat. I've not looked at Instacart. I mean, their partnerships are great, and maybe they will survive. But now there's the ad executive Fiji Siemens, she moved to OpenAI. Right? They had hired her to make money because she had an expertise and experience in building the partnership for advertisement. Now that executive has left and has joined OpenAI. I don't know who is gonna, join them. So again, this is not a business where I can look at and say, oh yeah, I want to go in it. Yeah, there are a lot of red flags, but when it comes to the short term, can you make money in the stock? You can do that in any stock. But I'm not looking at from a short term perspective. So I'm not on this. But if you want me to do a deeper analysis, you give me three things, Ravi. I know the ticker. Give me what's the market cap and who the CEO is. I got for Xpeng, which I took a note. I have a UNH for the next week. Maybe I can take one more. All right. Let's talk about Taco Trade. This worked out for me on Thursday. Taco Trade, I mean, Wall Street comes up with the creativity of Wall Street. I never knew Wall Street folks are so creative. So Taco Trade is Trump always chickens out.
Be careful while saying that you might be put to court by Trump,
Oh, that's also true. He's not happy with it, especially when I think one of a CNBC reporter asked, what do you have to say? He said, that's a very nasty question. So anyway, so basically, I mean, if you look at this whole V-shaped recovery, that's what it is. The taco trade is, hey, all bark, no bite in this tariff, 145%, 50% on euro. Now we are saying not going to do it until June 9th, etc. I think Street is a little bit harsh on calling it as a taco trade because, hey, this is how he negotiates. Eventually, if we can get 10% across, tariff across all the countries that we've been talking to, it is better than having 0%.
Vivek,
But then you say, oh, you started with 40%, now come to 10%, so you are chickening out. Come on. Yes, Sam.
the guy devastated the economy. He
Oh,
screwed. I mean,
I think
sorry.
it's too early to judge in terms of what's happened with the economy. I mean, nothing, there's not, I mean, the trades, we don't even know if the tariffs are in or not. So this
Well,
week, ICT Code of International, what, International, yeah, whatever, trade code.
yesterday.
Yeah. So the trade code, someone in non-discrete building, nobody had heard about it, but that code has an authority to review these trade tariffs, and they basically said, hey, you can't do this as a president, you don't have a power. And then of course the lawyers of White House, they went and got a stay from another appellate court. Now White House is figuring out other ways. There are some provisions in 1974, some stuff was passed, and they're trying to look at ways in which they can proceed the tariffs, right? So we don't even know in or out. There's a lot more volatility, but I don't think we can conclude right now saying, oh, the economy is broken.
Oh, Vivek, what I'm saying is, yesterday I was watching David Brooks, on PBS NewsHour. So he said USA and NIH taking down is totally not constructive. So I'm not just taking Trump on one matter. I take the whole gambit.
Yeah, I don't want to comment on USAID or NIH and the fundings, etc. I think those who have taken it down, you ask them, they have a different viewpoint. So depending on which story you want to go with, there are always argument in and against that. I'll just stop right here. But if let me say, rather saying Trump chickens out, I would say the market becomes overreactive. Why not put it that way? Right. So Trump came out and said, was it Thursday, right? Saying the companies that are building software for designing semiconductor chips should stop selling it to China, right? So till now, he's talked about the companies that are the chips, like NVIDIA chips. NVIDIA don't sell it to China. You have to get an export license, right? You can only sell the watered down chips. AMD, etc. Now, I think maybe it was Wednesday. I might be mixing up with the dates, etc. Maybe it was on Wednesday. He told that, hey, these software companies shouldn't be selling the software also. And then the Cadence and Synopsys were down 12%. And I have seen and I've viewed these companies. These are good companies. And I'm like, I think and the volatility was high. I thought maybe now I can sell some put spread to, if it falls down, maybe I can buy at a price at which I wanted to buy it. I'm okay to buy it. And then I sold a put spread against it. I did a spread so that, hey, if Trump says no, I will stick to this regulation and the stock continues to fall, I'm protected. And I think the next day it was, yeah, but we'll see what happens, and the stocks were up again. And I think Synopsys trade got closed at whatever 4-5% in a day. And if you annualize it, it'll become few thousand%. And I think Cadence, I'm still holding it. It didn't hit the profit target. So yes, I did benefit. Other way you can say is why the market is overreacting it. We'll see. But retail investors, you and I, we figured this taco trade before institutions have been. So hedge funds have been negative. Hedge funds and the institutions have been negative on the market, but the retail investors have been coming into the market. Now, whether the party will continue, I don't know. And I've been a little cautious, especially when the fear and greed index is sitting at greed. I want to be cautious. I mean, have had some decent gains for this year. don't want to be too greedy and trying to, let's go all in stuff. I'll sit and wait and watch. Market will give us opportunities. That will be a time to deploy the capital again. Right? But this volatility, I mean, depending on how you want to harness the volatility, for me, it's turning out to be good this year because you can get some decent option premium, but only if you know how to manage it. Because along with volatility also comes the risk. There's no free lunch. What else? BYD outsell Tesla in Europe for the first time. I don't want to go through the whole article, but I did watch the interview of David Faber. There was a two-part interview, and he did bring this up. And Elon was like, look at my stock price. And I recall very specifically when the stock price is down, and Elon was saying, look at our business. Right? He's in a denial mode. He doesn't want to acknowledge that the company isn't doing good as compared to competitors. Right? Another interesting chart. So Google, I had increased my position by almost 25% in 2025 because, hey, people are saying AI will eat its lunch and all that stuff. I came on another chart, which is YouTube has the maximum share of US viewing time than any other streaming company. We don't call Google as a leader in streaming. We talk about Netflix. Maybe we talk about Disney Plus as a competitor to Netflix. YouTube has the most number of viewing time, right? And they don't have to pay anything to generate their content. If look at the YouTube revenue, and we discussed it when I analyzed Google's results, quarterly results. YouTube revenue is more than the Netflix. If you annualize it, if not more, it is equal to Netflix revenue. And people all the time talk about Netflix as a streaming company, right? Google has got some good business, which if separated out, could unlock a lot of potential. There's a lot of potential in it. And of course, Google was available at much cheaper than all the other Mac 7s. I'm not sure now after the recent earning, not the earnings, but after the Google I/O, it has become a little more expensive, but I think still, considering all other Mac 7, it's still cheaper than the rest. But this was, I knew about the revenue side, but I did not know about the share of the viewing time. So Netflix go down. And again, the margins of Google will be much, much higher than Netflix because they don't have to pay too much for the content as much as Netflix. Let's see. Jose says we were due for a correction anyways. Who knows when we are due? I mean, in a hindsight, everything looks good. I mean, start of a year, I think I said, even if this year is a correction year, I won't hate it because we had 2 good years. And if we get this year as another positive year, it will be like a far and few that we get 3 consecutive positive years. So history has not been with us. So if this year the market returns negative, don't be shocked, don't be surprised. Just be prepared for it. Ashwin says YouTube now showing channel merchandise ads outside of video stream. YouTube is a new TV. So what else? Record level of buybacks from US companies. In April, we had 238, almost 233 billion buybacks. This is one reason why the stocks also could going high, because the companies have been buying back their own shares. So you don't have to increase your earnings, but you can increase your EPS by reducing the number of shares. Right? So you could talk about if the economy is not increasing, but your share price could still increase if the companies have been buying back the shares. Of course, it has got other implications saying, hey, how are you going to grow? Rather, can you not invest it in growth rather than buying back the shares or giving a dividend? But if a company says, hey, I have a cash, I don't want to invest in right now because the policies are all over the place. If I were to build a plant, where do I build a plant today? If I'm a manufacturing company, should I build it in Vietnam? I got burnt when Trump told me in first term saying move out of a China and we built in Vietnam, they helped us. Now I got burnt because we're putting 45% on Vietnam. Where should I build? Where should I invest? In US? What if the tariff is come down to 5%, 10%, I look like foolish that I did in US. All my competitors will go and do it in cheaper in Asian countries and pay 5% tariff and still be price competitive against me. I'm not going to invest. I'll hold it. Maybe I'll buy back some of the shares or maybe I'll give a dividend. So the record level of buybacks happening from US companies, I think they're trying to also figure out what to do with the money. Wow, 2025. This one is not that great chart. If you're a recent grad, and I think we talked about it, this is the whole impact of AI. This basically tells the difference between all worker unemployment rate minus recent grad unemployment rate. Right? So generally, the recent grad unemployment rate will be less. So this stays in positive territory. But after 2020, and then the whole AI LLM model coming in, we are seeing that the recent grad having a really, really tough time in finding employment as compared to the ones which are already experienced. Bad situation. Next one is investor guide to gold. All right, so not gonna go through the whole article, but again, the question was why to invest in gold? Right? It gives a cushion to your portfolio from volatility and economic uncertainty. So I think these two, I'm not sure too much on the volatility because sometimes gold itself can be volatile. But yes, from economic uncertainty, if you think that the world is gonna go to the dumps, this is a safe haven place, right? US treasuries are generally US treasuries used to be safe haven, but based on what we are seeing in last 4 months, it is not safe anymore. So the gold prices tend to rise when the investors worried about economic outlook or geopolitical shocks. You can also use gold to hedge against inflation, right? A weaker dollar make it easier for someone overseas to purchase dollar denominated assets such as gold, etc. So if you're seeing that the dollar become cheaper or devalue it, gold serves as a little bit of a hedge against that. It can also be used to bet on a falling interest rates.
Sorry.
Right? So if your interest rate goes lower, gold become more attractive because gold doesn't generate any yield in itself. So if I can get 5% from or 6% from treasuries or investing in CDs and I buy gold, it doesn't generate anything. But if that 5% comes down to 3%, my opportunity cost of investing in gold has come down. So that increases the attractiveness of gold, right? How you can buy gold? We talked about multiple times, so might be repetition for few, but those who are new and want to invest in gold, one is physical gold. If you buy too much of it, make sure you have a gun with you or maybe hire some bodyguards to protect you. I prefer more of a gold fund guy. I'm a guy who wants to buy and sell at the click of the mouse. I don't want to go to the shop to buy and then go to another shop to sell my gold holdings. I would rather sell it on shop.com or Think or Swim, right? So I own my gold investment through GLD, right, which will track the gold prices. You can also do gold futures, right? I don't deal in futures, so I've not done gold futures. But then if you don't roll your futures or don't close it, then you have to take ownership of whatever the sudden quantity of gold in one future contract is. So don't be surprised if let's say you bought a gold future and it was the money, and then which obligate you to buy the gold, and you went on a vacation and you come back home and you see some armored truck in your driveway because it got a vault of gold in it. So close your trades, future trades, right? Or you can buy gold mining stocks, either the individual companies, but also think that the gold mining stocks are susceptible to economic conditions. So let's say if the economic conditions are going bad, gold mining stocks may underperform while the gold is outperforming, right? So you have an additional risk of business that you're adding here, right? Buying gold was just a commodity. There's no business risk in that. Or, you buy GLD or you buy physical gold, you're not exposed to the risk of this CEO, what the CEO is doing, why this company made an acquisition, right? But if you're buying gold mining stock, you expose yourself to that additional risk. And maybe if the company is great, you have additional upside. So think what you really want to do. Do you want to get a pure exposure to gold? Buy GLD, buy physical gold or futures. If you want to get exposure to the businesses in the gold, you have a gold mining stocks, or you can buy the ETFs, GDX, GDXJ. So those are the ETFs that you can also buy. Why gold may not be a good bet? Gold also can be volatile, and that was what I was saying, right? Volatility, don't agree, but economic uncertainty, I do. When it becomes a very crowded trade, which maybe currently it is, right? So if I look at a GLD, right, it's been on a huge run up. It's up already 24%. Over the last 1 year, GLD is up almost 50%, almost 40%. Right? So it can be volatile. It didn't do anything from 2012 all the way to 2022. Let's go back and see. 20, do you have a 10-year? Okay, let's. So if I go back here, this is what 20. Hold on, let me go back and see which. This is 2015. Yeah, this is 2011, 2020, right? 180. I'm looking at September 2011, right? Then 2021, 2020. So almost for 10 years, it didn't do much. Sorry, this is, yeah, almost for 9 years, didn't do much. And then over the last 2-3 years, you got all the gains. So it could stay volatile. If gold is too high, because now you're looking at, oh my gosh, I missed the boat. Gold is already so high. I should have bought it earlier. Looking at 3-year chart, it's too high. Someone says go for silver. Right? Those who want to do technical or believe in charts and all that stuff, looking at the historical patterns, right? Silver follow gold. And for example, gold did so far in this decade, gold has returned 116% compared with 81% of S&P 500, right? Starting with 2020, gold has been on upside. Silver has given only 23% over the past year, underperforming the gold. So let me give you, I forgot to mark one specific difference was keep an eye on ratio of gold to silver prices as of what was the date? I think it's 2 or 3 weeks early. As of the past, the the gold cost 98 times as much as silver per ounce. Average over the last 38 years have been 68. So those who would want to do a pair trade, you can use this information to do a pair trade. The question is silver gonna go up or is gold gonna come down to move from 98 to an average of whatever 68 or 70? Then they talks about the only other time period when the balance was so out of whack was during COVID panic. In the 12 months following that episode, when the gold and the silver prices are diverged by a lot, silver rose 73% while gold climbed just 8%. During financial crisis, the gold-silver ratio never breached 100. It reached from 53 to 80 in November, but now recently it was actually above 100, and then it was down to 98. In 2016, the ratio topped 80. Once again, this has led to subsequent outperformance for silver. So if you think you missed the gold and the ratio of gold and the silver prices should normalize, this is a pair trade. Right? Short gold, buy silver. Not a suggestion, but if you want to do it, the history suggests that this gap should close. But not the returns, but the ratio. This ratio, which is now above 90, it should come down. That's what the history suggests. To hedge against a worst case scenario, gold still outshines silver. For anything less, history suggests it may be a time for investor to introduce new precious metal friend to their portfolio, even while keeping the old, which is gold. Maybe buy some silver. So that was an interesting article. I thought maybe I will bring this up, both the gold and the silver stuff. Dave says, I have a GLD, but like SLV better. Oh, see, we talked about silver. Sorry, I didn't read your comment earlier. Jose says, gold mining stock are risk on. Where is this article? I think these both are Wall Street journals. Both of them appeared in a Wall Street journal, maybe on a different days. But you know, I don't get to read Wall Street Journal every day, and then one fine day I'll go to library and read all 5-6 days old Wall Street Journal. So, and then I'll take note of what I liked about those. Gold is better than oil tankers coming. I think during the 2020, some folks probably had oil tankers, or maybe if they filled their swimming pool with the oil when the oil price was negative, that would have been that would have worked out really well. Hopefully, if the oil didn't evaporate in next year. Another chart. Should we ape activist investor? Right? Hey, Bill Ackman is doing this. I should follow. Carl Icahn is doing this. David Iron is doing this. Right? So there was an interesting chart around how the stocks have performed. While activists can temporarily boost the stock, the gains fade over the course of following year. Even the temporary boost hasn't been strong over the past 5 years as it has been earlier. Right? So cumulative median is what we should look at, because the average could be skewed by a very few outliers. So median 12 months hasn't been that great. Right? Especially last 5 years, the activist investors seems to have lost some of their edge, right? The stock, or maybe they got out within 6 months. And if you're trying to ape them because you saw this in news and want to follow them, be careful. Across all the activist investor positions, median hasn't been in our favor. Right? So you better do your own due diligence. I don't have an United Health that I'll bring in next week when I also bring other stuff. Private markets. I can't tell you. Sometimes, there's so much of a glut of information around the private markets, access to the private credit, private equity for retail investors. You cannot read any newspaper for 2 days or 3 days, any financial newspaper, and not have a information on private markets. So they are coming for you. Right? SEC is now considering we should open up private markets for retail investors in your 401ks and all that stuff. There are ETFs which are coming up. I think one of them is already trading. Your financial advisor might be coming to you and say, I've got a great option for you to invest your hard-earned money. It'll give you access to something that everyone doesn't have. Be careful, be careful. Okay. And there's a reason why they are all coming for retail investors. Because there are other customers, that those who have been their customers for decades are not giving them money anymore. Right? Pension funds, endowment funds, they have pulled back investing in private company or private companies or private credits, private equities. So the issuers have to find new source of income. Right? So they're now looking at the trillions of dollars in 401k. They're looking at the new crowd of retail investors who is happy to trade on the tap of a button without knowing what they're getting into. Yeah, why not? Why not sell it to them? Right? And now we have an administration which is more business favorable. And so Apollo will make money, State Street will make money. Who cares if you lost money as a retail investor? Right? So be careful, be careful. Howard is now learning a lesson, right? And the pitch when the issuer will pitch you for private equity and all that thing is less volatility, superior returns. Less volatility. Number one, that's the biggest pitch to the pension funds. I say, hey, you don't want a huge volatility in your portfolio because you got a pension obligations. They'll come with the same pitch to you. Stock market is volatile. See what happened in the market. It was down 30% at some point of a time. We had a drawdown of 30%. And now it's went back up 20%, too volatile. While the private credit instrument is not that volatile. How do you respond to that?
They're not liquid.
Exactly. It's like we all were together, we went on the weighing scale, and then you are a private credit person, you went into a private dining hall. I'm a public market, I went with everyone else to another dining hall. We had the same food, which was all eating junk every day for 6 months. But I'm in a public market, I have to step on the weighing scale every day. And you'll tell me, Vivek, you gained weight. Bad. Not going to invest with you. I'm a private guy. You don't have to step on the weighing scale. You will still report your weight as before we went on the 6 months of eating junk food. I'm not going to get onto the scale. Does that mean that the assets that you hold or your health is same as before the junk binge that we ended upon? No. Now the Harvard have found out in a really, really hard way. So as you guys know, guys, we are done with today. I'm just yapping about these things because I get riled upon when I see all this private stuff. I'm like, dude, you got to know what you're getting into. I'm not saying everything is bad, but you need to do your analysis. Not everything is as rosy as these issuers are pointing out to be. So Harvard, because now Trump is saying we're not going to give them any grants, is going to cut off source of funding by saying don't enroll international students, all the stuff that you're reading in news, right? So what does Harvard do now? They have a lot of investment in private credit. They have a $53 billion endowment fund. Bunch of it is in the private side. Bill Ackman says, and Harvard has found a hard way, that if they want to sell that, they'll probably have to sell it at 30 to 40% discount of what they're claiming the worth of the asset is. So when you say that is not volatile, it is because you haven't measured what your current worth is. If Harvard wants to sell this, and Bill Ackman talked about it in one of a conference, or maybe it was in one of the interview. Then someone countered him saying, oh, no, you are being too harsh. It's not 40%, maybe it's 20%. Even 20% is a huge haircut for an asset that you told is not volatile. That's the story. So be careful when you're getting into this whole private stuff. And when your money manager comes and pitches to you, or financial advisor will say, I want to, give you something which is not volatile and has performed better, because you never measure yourself. If you start do the, if you mark to the market, you will see that some of these private investments may be even more volatile than the public one, right? So, but I think the pension funds and endowment funds and the hedge funds, they have figured out that we have played this game enough. They're saying, guys, give me the returns. How does these people make returns? When the company become IPO, when the merger and acquisition happen, you get an exit liquidity. So they'll get the liquidity and then they will hand it back to the pension fund, say, hey, we generated so much returns for you. Over the last 4 or 5 years, that market has dried down. Not many IPOs. We looked at the IPO charts after 2021, it's been going towards the south. M&A has been killed up because Lina Khan was there. Even this year, I haven't seen big M&As. There are a few IPOs came in, not really big ones. So those who invested money earlier they're saying, you haven't returned me any money. You're coming saying, I want to raise a new fund for new private equity. I'm not giving you anything. Where is my return? So you can't go to them again. You can't go to your pension fund because you haven't returned them money. So where are you going to go? You're going to go and find out retail investors and say, okay, let's take money from them. So that is what is happening in the private market. There is a $6 trillion worth of investment which is stuck. 26,000 deals which are not being waiting for an exit. It's not that suddenly there is a love for retail investors. Wall Street will go where they can make most money. It's not that they want to see, oh, retail investors should get this exposure to this great asset class. No, they don't think about you. I mean, I'm a positive about the markets, but you need to understand where the Wall Street is coming from. Their source of funds is drying up. They need new source of funds because they make money when they deploy the money, because they're going to get 220, right? 2% management fee and 20% profit. And if you can't get more money, you can't deploy it. How are you going to pay salaries to your investment bankers? This is where it is. I'm so sick and tired of seeing this private market, private credit, retail investors, why they should go in. Guys, focus on what the reality is. Some of them will be good. Most of them will probably, if they're not liquid, I don't want to be in. Plain and simple. Now they're getting Apollo to provide a liquidity. You got a counterparty risk. But I think right now public market is still okay, right? We still have 4,000 securities that we can trade. I necessarily don't want to get an exposure to SpaceX when I don't even know what is it worth. Is it worth 118 or is it worth $300? Because in the private markets, they're traded at both valuations. I know SPY is worth 590 and I know it to the penny or a couple of pennies. I would rather trade there. All right, enough ranting about private markets, guys. But I had to get it out. I'm so sick and tired. And sorry, you've been the victim of this. But that's all for today.
Hey, Vivek, play the link. Vivek, play the link I sent you. It's hilarious. It's exactly what you're talking about, but it's making fun of those wealth managers taking retail money. Play it. I guarantee you'll have a great laugh.
To draw always.
Okay, hold on. I need to let me share my screen.
Oh, they banned it from YouTube because Charles Schwab sued them.
Oh, I'll watch the rest later. But yeah, that's what I'm saying. You got to be your own.
No, you got to watch the rest. It's hilarious. There's only like 1 more minute left.
Okay, I don't want to, hold up everyone, but the link is there. You guys can.
Oh,
So, I mean, you have to be own caretaker of your own money. No one is more interested in making money for you than you would be. So that's all the message. We will be bombarded with all type of exotic instruments, and they make it sound like these are the great ones. But be aware what you're getting into. And then, people will come and say, oh, I lost money in this one, I lost money in that one. My friend told this, my financial advisor told this. No, man, you lost money because why did you listen to them? Listen to yourself.
Hey, Vivek, I have one question, a
Oh.
general question. Earlier, when you were showing the SPY chart and it has a, V-type recovery,
Mhm.
you mentioned that the retailers actually came back pretty hard. My question is there generally speaking, is there a way to gauge if the activity is driven by, let's say, retail investors versus institutional? Um, I, based on my understanding and knowledge, it's usually the volume that they say, if it's a huge volume on a specific day or week, whatever, so institutional investors were, heavily, let's say, investing or taking money out. But generally speaking, do you have any thoughts on that, retail versus institutional activity? How to gauge that?
I did not gauge it. I saw this and heard it on one of podcasts that I was a podcast on YouTube. So it's basically
Uh-huh.
webcast and
Uh-huh.
more sophisticated fund managers. So data was presented from them. I generally
Uh,
don't track what is retail investor doing or
okay.
institutional investor doing. I rather focus on what is my company doing. But I listen to a lot of stuff and then I bring it up here.
Yeah, totally. One more question on this again is just for us retail investors, if you were to say, hey, these are some of the sources, top three sources, just to gauge what is going on every day or every week, what do you rely on more? What would you suggest as a general, information gathering tool, top three or five that you rely on for making your informed decisions?
So I read, and when I say read means even it could be no audio stuff.
Mm-hmm.
I read Wall Street Journal. I read one Chinese South China Morning Post because these are the two biggest economies. I used to read a Japan Times. I also used to read full of Indian newspaper. I don't have a time to do three or four. So I right now I focus only on two. I read Wall Street Journal. I read South China Morning Post, but I read it a few days later so that I don't get uh, you know, um, nervous by what's happening recently, because then it becomes much easier to, let's say, if I today's newspaper, I read it 4 or 5 days later, I'm like, oh, this news, I can skip it. Not much of an importance. But if you read it immediately when it happened or the next day, I got to know everything about what the
Yeah.
Trump said, right? So it becomes too much. So one is I read. Uh, then there are a list of, I think most of my knowledge come from list of the podcasts or the webcasts, right? Sometimes I get ideas from them. Then I read
Mm-hmm.
Bloomberg Weekly, I read Barron's. These are the two magazines which I read, whenever their issue comes out. But and then regular consumption. Mine is podcasts. And then
Any suggestion on that? Anything you think is worth for us listeners to? Again, I don't want to ask you the entire list. Anything you say, hey, check this one out, which is very.
yeah,
Oh,
I've shared when I've shared the whole list of podcasts in one of the episodes, and uh, I don't remember. Sorry, let me just find out where did I share. There's a whole list of podcasts that I. Oh, okay. Let me give you, rather than giving the whole list, let me tell you a few which I can pull up right now. Right. So one is Motley Fool Money.
uh-huh.
Right? That's good because they basically get into, let's say, every time earnings come out, they'll analyze the earnings and tell you what's happening in this one. So before I want to dig deeper into earnings, or the stocks that I don't own. I just will use Motley Fool to see at a high level what happened, and they'll cover the daily. It's a daily podcast. There is a one from Bloomberg which called Business Week Daily. There is a one from Investor Business Daily (IBD) which called Stock Market Today. They talk about some of the stocks that have been hot on that day. They'll pick up 3 stocks, right? Again, you may choose what you want to do or not, but that'll give me some idea of, okay, what's happening on the market. Bloomberg Technology is a podcast, which I listen to. The other one is a Compound and Friends. They have a couple of podcasts. This is where they will bring in some Wall Street managers, and they'll share about what they are seeing in the market, right? So like I said, retail is driving this rally. Probably I heard it on the Compound and Friends. Right.
Thank you. Thank you.
Then there are some few related to crypto, few related to how to become a better investor, value investing in good company, macros. There are a lot more. But
Okay.
yeah, I consume a lot of information through that. And then of course
Yeah, thank you for
if I find time to read books, I'll read books.
thank you for sharing.
No problem. Nick says recommend Tasty Trade Live. If you want to get into options, then Tasty Trade Live is good.
Yeah, thank you.
Hey Vivek, so a couple of points. I mean, I'm really thankful for this, what you do every week for us. The broader question right now, which a lot of people are asking, is how does it all pan down to tax situation, because tax is a big one, and especially if somebody is closing retirement right now. This is the year of volatility makes a lot of people nervous. So I would ask for about annuities, things like that, how they can guarantee a part of their portfolio. Obviously, there no free lunch out there if you're doing homework out there. So any other recommendation on, let's say, fixed income side? Because say people with some money are 5-6% bond portfolio, which if they are in a high tax bracket, it's still pretty attractive without the volatility and drama on a daily basis. So
So there are corporate, I mean, you can find some AAA grade corporate bonds giving 6-7%. I mean, if you, and let's say if you're retirement and you think 7% life will be good, you can find some good rated AAA corporate bonds giving 7%.
Gotcha.
Right?
Yeah.
And annuities do have a place, but you have seen me. Don't hold of annuities. Don't have very high opinion around annuities. Because overall wealth generation, it's not a tool to generate wealth.
Yeah, I mean, yes and no, because let's say I have an uncle who lives in San Leandro. He's a retired jailer and pretty nervous on the market, right? People get carried away. And an annuity product for somebody like him, for let's say a portion of the portfolio, where they know no matter what, they're going to come for life. I know it is a lot of fees, but then they like the solution which is counting, which is not a bad thing, because fees are there for a reason, but they're getting guaranteed income for life.
Yeah, I'm saying I maybe I didn't say it right. I'm saying annuities have a place. At some point of a time, maybe I might have to do, because if I pass away, I know my spouse has zero idea about it, and she might just put the money in the bank. I would rather put it in annuity than putting in a bank. But if we can do as much as little bit of risk management and follow the stuff that you talk about, it is, hey, don't keep money in the stock market if you need for next 2-3 years, then I would rather not touch annuity. But yes, it does have a space. Not for me right now. Maybe for a person who is completely want to be completely away from the market and keep money in the bank, better put in annuity.
Absolutely, it totally makes sense. And at the end of the day, we are responsible for ourselves.
Exactly. Yeah.
Because that's the buck stops on me, not to the money manager or the financial advisor or insurance guy who just want to sell the latest product, make commission. That's it.
Yeah. So what pisses me off is, in terms of, I've seen some of my friends, not now, like 10 years ago, and when they were like, yeah, I'm paying every month this much into an annuity which will pay me this much in return. I'm like, what the heck you're doing now? Right? You got such a huge growth, and you can't build wealth on annuity. It is just to preserve and then the consume. But if you have like 20-30 years for retirement, I'm not touching it.
I know. This is, and I personally, I had somebody sell me about what, 17, 18 years ago. It still owns to be my friend. We did life insurance on the kids, not for the death benefit,
Okay.
but for a kind of, cash value growing. And eventually
Yeah.
we to gift that life insurance to the kids without tax and without any proof of insurability required. So I don't know, it is still kind of repent, but I sat down with him and he kind of says that right now is not the time to cancel that because the real growth of value happens now, 15, 16, 17 years down the line. So like a mortgage. So like anything else, right? It's just pros and cons stuff.
Yeah, every one of us learn lesson. I remember many years ago when I was looking at okay, invest and all that. I spoke to my CPA. He directed me to a financial advisor, and then she was trying to pitch me some annuity. That time I just started, on option. I think 2018. So I started in 2016. So I was like fairly confident around calls, puts, and what all stuff. So I spoke to that financial advisor. She pitched me some annuity from someone, and I asked her two questions. I said, "Is this guaranteed?" It's whatever that 6%. I'm like, they said this is the max, and I said, "Are you fiduciary?" She said, "No." Like, how does this company generate 6%? They said they do some calls and all that stuff. I'm like, okay. I don't have to do they, I know better. I can do better than what the max 6% what she's claiming that
Yeah.
it can earn and all that. Anyway, I think we're 12:40. So let's, I think 2 hours 40 minutes. Thank you everyone and for joining today. Hopefully my rant, thank you for bearing the rant around the private markets and private credit. I just had to get it out. And then we had that article. So let me share my thoughts. So we'll talk to you again next week. Next week, I got a Xpeng and a UNH on docket to give you a quick overview of a company. And if you like then to dig deeper, you can go and dig deeper into that one, right? But I have developed one of my, my own framework to quickly analyze a company before I spend few hours on it, right? So I'll do that next week on Xpeng and
Look
UNH.
forward to do the UNH because I'm right now only on ETF. I'm just UNH is a wild ride as well. I don't know. I look forward to that.
Cool. Alrighty. Well, that's it then. Thank you. And we'll talk again next week. Bye-bye.
Hey, thank you, Vic.
Yep.